It's no secret that we are in the midst of a bear market, so I want to take this opportunity to discuss how I'm surviving and hopefully thriving here in a few weeks or months in this environment and kind of the strategy I have right now. Now, if you guys missed this video I did a couple weeks ago, I talked about two of the crypto mistakes I made that cost me a pretty penny. Now, the first was being too leveraged. I took out some loans against my Bitcoin and my Celsius network tokens. The Celsius network loans got liquidated. I lost a bunch of tokens there. But this was a wake-up call for me to deal with my Bitcoin loans before things got worse, in case they do get worse, which I think is still a possibility. Now here I took out $3,000 of stable coins against $12,000 in Bitcoin at the time. But with Bitcoin's price, this loan got dangerously close to my margin call level. It doesn't look like I'll be able to see it anymore, but I knew I needed to close this loan out. I think the margin call was about $23,000 of Bitcoin, Bitcoin price level. So if Bitcoin hit $23,000, I was going to need to back up this loan with more collateral, which I didn't have available because all of my Bitcoin was locked up in these loans. So to pay off that loan, I sold some altcoins and I put in more cash, releasing all of that Bitcoin collateral. So now this leaves me with only some loans. I still have quite a bit of Bitcoin locked up here, but none of the margin call levels are above $20,000 in Bitcoin price. So currently, even my riskiest Bitcoin loan right here has a margin call at about $18,000, and I won't get liquidated until below $15,000 of Bitcoin price. Obviously, I think below 20K is super unlikely, but even if that does happen, I'll have all of this freed up Bitcoin collateral now to add to these loans and protect myself further. But ultimately, now that I've de-risked these loans, I can refocus on what I'm going to do in this market environment. So that's what this video is going to be about, and it's really going to be a two-pronged approach for me. The first being Bitcoin, and the second being my Sifchain position, which I've talked about plenty on this channel. So I'm gonna revisit that, let you guys know what's going on there. But let's take a look at what I got going on here. The primary goal I have right now is accumulating Bitcoin, and there is a couple different reasons for that. First, I want to be a whole coiner, and I know I can accomplish that in this market if I play my cards right. So that's something I'm working towards pretty aggressively. I'm really eager to accumulate Bitcoin under 30K, and I get more and more aggressive the lower it goes. So on these dips under 29,000, I really get excited and buy a little extra. And when it pops back above 30 or 31,000, I hold off on my dollar cost averages for a few days. I've been watching a lot of Benjamin Cohen lately, and he does a lot of great analysis, specifically regarding kind of bottom signals and bear market signals compared to previous Bitcoin cycles. And this is something that I kind of realized in the past. I started investing in crypto in 2017, experienced that bull run and then the following bear market, but never kind of really put the pieces together. So these videos have been great in helping me do just that. And ultimately, the pattern in bear markets is pretty simple. When markets are going down, people are selling their altcoins into Bitcoin because it's going to fall less, which kind of exacerbates the decline of these altcoin valuations. So when prices are going down, it's tough to hold altcoins because you're going to lose more money than if you just held your assets in Bitcoin. And kind of in the middle, when there's this uncertainty, maybe we're not actively dropping, but we're just kind of trading sideways and there's a lot of fear in the market. The same thing is kind of going on. People aren't going to be buying alts. They're going to be selling them into Bitcoin again because it's going to be the safer asset in the short term. And this is because when the market starts to recover, Bitcoin is the one that needs to recover first and show strength before people are confident investing in those riskier assets, being altcoins. So in previous bear markets, I've completely ignored Bitcoin because the altcoins got beat up so much worse. I thought buying them at the lower prices would lead to greater returns when the bull market happened. When in actuality, Bitcoin is probably the safest choice in these environments because it's going to fall less and it's going to recover first. And at that point, if you feel like trading out of Bitcoin and back into some of these other altcoins, then that could be a good opportunity to do so. So between that and my goal of becoming a whole coiner in Bitcoin, my entire focus right now is buying Bitcoin. I'm not putting money anywhere else in the crypto market except for what I already have, again, which I'll show you here in a few minutes. But that is my goal right now, my focus. And I'm kind of doing this in two parts. The first, again, is dollar cost averaging into Bitcoin anytime it's under 30K. It's pretty clear that it's been bouncing between about 29,000 and 31,000 over the past couple of weeks. So as long as this keeps going, I'm just going to keep scooping some up under 30,000, probably around that 29,000 mark whenever I can. And this is because I know that long term, anything under 30K will be a great price to have bought Bitcoin at. Even though there are some slight fluctuations and I'm being a little greedy trying to get it under 30K each time, I know I'm going to be happy with this long term. So I'm going to keep putting a few dollars here and there into it at those points, those levels. But the second part of this is that I feel like there is still further pain to come. There are a lot of mixed signals in the market still. There's a lot of uncertainty. So I believe lower prices are probably going to happen for Bitcoin, whether that's 27, 26, 25, maybe even lower. I'll be ready for whatever. So in addition to some of these dollar cost average buys I do under 30K, I'm also accumulating some cash on the side so that I can be a little more aggressive if something comes to 28, 27, again, those mid 20,000s or low 20,000 price point for Bitcoin. In order to do this, I've cut back on a lot of the things I've outsourced. I have a couple different side hustles going on, freelance writing, video editing, a couple different things. So for a while, I was outsourcing a lot of it, kind of taking a cut on my own profits in order to make those side hustles a little more manageable, take less time for myself every week. But these last couple of weeks, I've started reining that back in, doing most of the work myself again so that I can keep most of the profits. That way I just have this extra cash around to invest. I know this is, again, one of the best opportunities I will have to accumulate Bitcoin at these prices. So I'm making some short-term sacrifices of my time to earn some more money and have that money available to invest while the prices are low. Again, I don't have a specific target price I'm looking for to buy Bitcoin if it dips lower. I'm just going to get gradually more aggressive as it gets lower below 30,000, and that's what that cash is going to be waiting for. And of course, all of these purchases will now be done and held on FTX US. I made a video about this just this past week about why everyone in the US who is buying crypto should be using FTX US. It's really two main reasons. The trading fees as low as 0.1%. That beats Gemini Active Trader, which was my previous favorite exchange. The other great part about it is that FTX US pays up to 8% APY on your first $10,000 and then 5% APY on anything above $10,000. That could be cash you have in your account waiting to buy limit orders, which I have. That could be Bitcoin in your account that you can earn up to 8% on. So that's where all my buys are going. I keep my cash here. I made 12 cents here already, $4 of Bitcoin already. So this is where I'm putting all of my assets to work while I wait and buy. And even after they're bought, they're going to keep sitting there and earning money. So I'll leave a link below if you're interested in trying FTX US and you haven't checked it out yet. You can also check out my previous video for more details on how to get started there, save the most money, earn the most money, and all that good stuff. And that pretty much sums up my Bitcoin strategy and activity right now. But if you've been following my previous videos, you know I've also been active on Sifchain, which is a DEX with a native token called ROWAN. Now, when the market was doing a little bit better, this was a great place to have your crypto because you were earning 200, 300% APR on your assets you were liquidity pooling on this DEX. However, there were a couple changes made to the DEX and kind of the algorithms at work behind it in an effort to strengthen the token that kind of ended up backfiring when the market started going south. And because of this, the price of the ROWAN token went from about 15 cents, a little higher at some points, down to now less than 1 cent. And in the short term, they're still making quite a few adjustments to the platform here. First, they're resetting the pool composition to 50-50. So for these liquidity pools, what had previously happened is because of this program they implemented, PMTP, the balance of these liquidity pools had shifted in favor of ROWAN. So instead of being 50-50 ROWAN and another token, they were more 70% ROWAN and about 30% of the other token. Now this was great when ROWAN was doing well, but now that it's dipped about 95% or so, it's not looking so good. So they've reset this to 50-50. So now anything you put into these pools will be split perfectly between ROWAN and the other asset in the pool. They've also disabled the PMTP function for now, possibly bringing it back in the future, possibly adjusting it. There's a lot of discussion right now. Basically, my point with this is that there's still a lot of things that they're planning on doing, discussing doing to optimize Sifchain DEX for the long term. And in my opinion, that means short term, the ROWAN token could go any direction. And it's a tough place to feel confident pooling your assets right here because the impermanent loss could be really emphasized based on the activity of the ROWAN token. So recently, I was a big advocate of this USDC pool because you could pool your ROWAN token with the USDC stablecoin, kind of reduce some of the price fluctuations there. And it's incentivized with one of the highest APRs, currently about 180%. And being in this pool kind of worked out in my favor in a way because as the ROWAN token went down, the USDC coin, of course, held its value. But because it's in these liquidity pools, some of that USDC was sold off to kind of bring back into balance the ROWAN USDC composition, which means it sold off USDC and purchased more ROWAN token, which was the underperforming token. Now, of course, I still lost money because ROWAN went down so much, but I was able to accumulate more ROWAN and lose less US dollar value than if I held my entire pool value in the ROWAN token alone. Now, I'd also been noticing over the past several weeks that these pool APR rates have been dropping, and I couldn't quite figure out why because they're supposed to be incentivized for this ascension period until I dug into the spreadsheet here. The thing is, these APR rates on the pools are supposed to be a function of the staking APR. So these incentivized pools, the pools of the people, receive a 1.5% factor of the staking rate. So they're supposed to get you 1.5 times the staking APR in those pools. And every other pool, where is it? I believe it's, here we go, 0.84 times the staking APR. So theoretically, if you're pooling your assets on the Sifchain DEX, you should be earning more than you would if you just staked ROWAN normally. However, there's something else going on here. They have an emission schedule where they have planned to release no more than a set number of ROWAN tokens on a weekly basis. And this is to keep the inflation in check with kind of what the team is projecting and what they want the supply to be at the end of this. And as you can see, this emission schedule decreases over time. So as we get closer to the end of the program, they want to release fewer and fewer tokens. Again, really just to incentivize those early users and kind of wean off the rates towards the end so that it's more sustainable and better for the token price. Unfortunately, this means that not every pool can earn up to that full 1.5 times the staking multiplier APR rate. They have to adjust this maximum eligible rate based on how many tokens they want to release into the pool each month or each week. So you can see as a result, instead of getting that 1.5 multiplier on the staking rate, you're actually only getting 1.08 times the staking rate, which means these incentivized pools are pretty comparable to just staking on its own. Additionally, these pools have had a 7-day unbonding period, which means if you want to pull out those funds, reinvest them elsewhere, compound them elsewhere, or just take profits, you have to wait 7 days to do that, which doesn't give you a whole lot of flexibility here, especially as the market is dropping. It's not great to have your funds locked up. Now, they did vote to remove the 7-day unbonding period, so that should be going into effect in the next couple days here. But because of all these factors, the unbonding period, the short-term risk for impermanent loss, because I think ROWAN is going to be increasingly volatile as they kind of tweak things and reset things, as well as me realizing a bit of impermanent loss already in this USDC pool, resulting in more ROWAN tokens, less USDC. I took this opportunity to remove all of my liquidity from the ROWAN DEX, specifically in the USDC ROWAN pairing where I had most of my assets. As you can see, I only have about $100 here left in this ROWAN legacy pairing, which I'll revisit at another time. But I realized one main thing. I could be in this ROWAN USDC pool right here, earning 182% on my pooled funds. I was really just using this pool as a way to generate more funds to move into other pools and accumulate coins I wanted, like Legacy or like Wrapped Bitcoin, which will be my next target. But with the 7-day unbonding period and the impermanent loss I was realizing by sitting in these pools, it was getting less and less attractive. Especially when you go over to Kepler and you can see I can earn 180% staking, no risk of impermanent loss here. Plus, I can claim these rewards anytime I want, immediately pull them out, at least my staking rewards. The staking does have, I think it's 21-day unbonding period. So if I wanted to remove my staked funds, I would have to wait 21 days. But the staking rewards are paid out every single block. So I can go in here any day, claim my ROWAN rewards that I have earned through staking, and immediately go and reinvest them elsewhere, sell them, do whatever I want with them. So I'm getting a lot more flexibility here staking. I'm getting the exact same APR rate. And while the price is so low, I'm getting no impermanent loss whatsoever. So when the ROWAN token recovers, which I hope it does, I'm sure it will eventually, I will not experience all the impermanent loss from being in those liquidity pools. So my plan here, I'm just going to compound these. I'm going for 100K ROWAN just to have a nice round number. And then once I get there, I'm going to be claiming these staking rewards every single day. And that's when I'm going to finally revisit these pools. Again, I'm probably going to be focused on Wrapped Bitcoin, get me to that whole coiner status as fast as I can, and keep accumulating some legacy as well. This is really a high risk portion of my portfolio. Again, that's why I'm not putting any more money in here. I'm just kind of letting my ROWAN tokens work as best as they can through staking, compounding, accumulating some other tokens with those staking rewards, while I continue focusing most of my efforts on earning money, putting money into Bitcoin at these prices. And there's also a really cool thing going on here with staking that I will be covering in next week's video with this validator right here, Kleomedes. You'll see this commission rate on validators, and this is a percentage of the staking rewards that they take as compensation essentially for running these validators and facilitating the staking process for you. So it's generally attractive to find validators with lower percentages because that means you get a higher cut of these staking rewards, but also the commissions are a necessary thing because they do keep these validators up and running. They need to be incentivized to do it to keep things running smoothly and securing the network. But this is why I have chosen Kleomedes as my validator, because unlike some of these other validators, they are using these profits to reinvest and kind of distribute profits back to their stakers. And the way that they're doing this is through the Cleo token. So they took a snapshot a couple months ago, and they're going to airdrop this token to anyone who is staking to their validators at this time. With the creation of this token, they're now able to kind of create an ecosystem of buying and distributing these tokens, and that is exactly what they're going to do. Basically, with all of the profits they get from staking, they have validators on multiple chains throughout Cosmos. They take this commission rate they earn through staking, and they're going to use those funds to buy back the Cleo token that they've distributed to their holders. So this puts continuous buying pressure on the token, and they're also going to distribute these tokens as airdrops to users who stake to them over time, kind of distributing that profit back to them in another format. So again, this is something I'll cover in detail next week if you guys want to take a closer look. Really cool project for staking throughout Cosmos, so definitely stay tuned for that. So hopefully I didn't ramble on too much there. Again, my primary goal right now is accumulating Bitcoin, picking up some more side hustles, staying focused on making money right now so I can keep buying Bitcoin at these prices while they last. And with Sifchain and my ROWAN tokens, really just trying to let them work in the most efficient way before I jump back into these liquidity pools. Again, I think Sifchain is a great project. I'm really excited to support it for the long term, but I got to find the best way to do that. And right now, I think it is staking, auto compounding, and then pulling some of those rewards in the future to buy some of their tokens. Again, if you want to buy, hold, and earn Bitcoin these days in the US, definitely check out this video on FTX US for the best rates on all of those things. And stay tuned for next week's video on the Kleomedes validator. Thanks for watching. See you guys next time.